Today, I want to talk to you about SoFi and provide a brief overview of the recent events impacting the market. We'll cover key data points, what you need to know, and some interesting market trends. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell, so you never miss any of our uploads and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi ended the day slightly in the red, down by 0.66%. The stock experienced a roller coaster of a day, starting at a low of 7.41 and rising to a high of 7.76 before the market began to pull back. Let's break down what caused these fluctuations and other factors affecting the market. There's currently a lot of uncertainty in the market, as highlighted in a recent interview with Young Yumer, Chief Investment Officer at BMO Wealth Management. He discussed the mixed data we're seeing, with a glass-half-empty perspective dominating until more consistent positive data appears. He noted that uncertainties around the Fed, the economy, geopolitics, and upcoming elections are creating a high degree of market volatility. According to Yumer, we may be in for a choppy few months, but he remains optimistic in the long term. Yesterday, the manufacturing data didn't meet expectations, indicating a contraction, which added to the market's anxiety. It seems that the market is fixated on rate cuts, viewing them as a potential solution to current challenges. Today's data also failed to meet expectations, which stoked further fears. As a result, the likelihood of a 50 basis point rate cut at the September 18th meeting increased to 45%. Institutions like Citi and Bank of America have also suggested that such a cut is likely. Growth stocks saw a rally based on this news, but inconsistent information has kept the market in a state of flux. The Fear and Greed Index has dipped below neutral, signaling reduced appetite for risk. Short interest in the market remains high, with shorts increasing by 1.09 million shares, equating to 17.83% of the free float, or about 186.65 million shares. Around 40% of today's trading volume was linked to algorithmic trading, which seemed to push growth stocks higher despite large selling activities. The market has been acting unpredictably. Even as some analysts had expected the Fed to cut rates at their last meeting, other central banks, like Canada's, have already made multiple cuts. Canada's TSX rallied after a 25 basis point cut, and there's talk of further cuts ahead. Similar expectations are forming around upcoming meetings in the U.S., where a total reduction of up to 100 basis points could be on the table. Such actions might be the catalyst needed to boost market momentum. However, the market remains fixated on interest rates, which continue to drive volatility. Shorts are active and seem to be waiting for upcoming economic data releases, such as jobless claims and employment figures, which could introduce new volatility and either confirm or refute the likelihood of a rate cut. Today, SoFi saw 3.27 million call options traded against 844,000 puts, with 46% of the options activity leaning bullish. Most call options are targeting a strike price around $8. However, given the current market dynamics, we may not see SoFi reaching that price this week unless something drastic occurs. Most likely, the stock will hover around the $7.50 range. Dark pool transactions continue to influence the broader market. Reports suggest shorts are using these transactions to manipulate market sentiment, which has led to significant downward pressure. The dark pool was initially created to reduce excessive volatility, but it has become a tool for large entities and shorts to control market movements without attracting attention. As of now, SoFi is trading between key pivot points, with resistance at $7.58 and $8.31. It briefly broke below its 200-day moving average today, indicating potential bearish sentiment. Many retail investors remained on the sidelines, contributing to a flat trading day overall. In summary, the market remains unpredictable with various factors, including economic data and interest rates, driving sentiment. Are you buying, holding, or selling in this environment? Personally, I'm waiting for clearer signs of support before making any moves. Let's see how upcoming earnings reports from major tech companies play out, as any signs of weakness could potentially drag the market lower. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.